All right, I want to welcome you especially to today's weekly review. Of course, I'm Judy Victor, also known as Crypto Forex God, and I'm your mentor for this particular KFC trading. And I want to take our time to look at what we predicted for the market last week and what it turned out to be like. Okay, so I'm going to share quickly with you my Trading View app so we can now begin to discuss from there. Okay, so now my TradingView app is on, and for the sake of those who were not with us during the analysis, we usually would let you know that we start our analysis from 1 week time frame. Well, someone was asking me one time if I trade one currency pair. Now I trade several currency pairs. I trade synthetic. I even trade commodities. I trade gold. I trade silver. I trade US 30. I trade power. Now, but there is a reason why I decided I will stick to GU, and it's because there's something about when you stick to one currency pair, it helps you to be able to keep focus, direction, and then to be able to achieve. I have a target. There's something I'm working on, and as soon as I'm able to hit it, that's when I think I will want to diversify into other currency pairs. And this is because I'm following the mentorship of Jeffrey Benson, and I've seen Jeffrey Benson produce several results all through the years with just a single pair. So do not think I do not trade other pairs. I do trade other pairs. So this is what we normally do. Now, when you look at this 1 week time frame, you find out that there are a lot of lines. So you're wondering, how did they come up with all these lines? Basically, it's when we begin to put lines for price actions, that's when you see that the lines become many. What we only do from this 1 week time frame is we just identify the price actions from this higher time frame, and then we identify the trend, and then obviously you can see this is a downtrend. But I've been pointing out this counter trend to us, and I've been telling us that there is this counter trend here that was rejected here. So if you look very well, you see that there was a huge rejection from this price action, and that was what happened in the market during the week that caused that serious buy. I think that was on Thursday into Friday. So we go straight to the 24 hours time frame. We still add our price actions. Now, if you're wondering how to add price action, just make sure you are in what's it called? Analysis class Monday morning. That's what you need. We can't be taking all that because we don't have all the time for this review. So, but just take note that we take price actions from 24 hours time frame, and we also look at trend. So this is obviously still a downtrend, but I'm still paying attention to this counter trend. That's why you're seeing that I'm putting this line. You can see I'm putting this line because I'm expecting, for any reason, the market is not mine. The market is controlled by everybody in the market. So for any reason, I begin to see a build on this line, I know that the counter trend is becoming valid. If not, if it builds and gets back to hit this downtrend line and begins to go down again, I know we are still on a downtrend. So that's the reason for that. That's what we do from 24 hours time frame. Sorry if I'm a bit fast. I'm just trying to do that so I can be able to meet up with my time. So we come to 4-hour time frame. What do we do on 4-hour time frame? Those of us that can remember, we turn on our session breaks. If you're wondering where to turn it on, we go to setting. On setting, we go to events. You just tick session breaks. We also turn on economic events. I put session breaks on green. I put economic events on red. Reason is because I don't trade news. We don't trade news. Why don't we trade news? Because news most times works against our strategy, our strategy. So when you use news, it will not work. So this red is just like a danger. I will not trade once candle is on this line. So we do that on 4-hour time frame. We turn on those session breaks, and then the next thing we do is we look at the two candles that begins the week, and we use it to mark our high. We mark the high of it and the low of it, and from the high of it, we're able to tell ourselves that okay, we're going to be buying throughout this week, in this side, and throughout the week we're going to be selling on this side. So this is what I mean. These were the two candles. If you can look closely, looking at my session breaks, you observe that these are the two candles that started just last week, the green one and the red one. So we marked the high and the low, and then from this we use red line to tell ourselves that okay, upward it's a buy region for the week, downward is a sell region. So that's what we do from the 4 hour time frame. We also take note of price actions, and we're able to ascertain that, okay, if price gets to this place, we'll be looking out for a new action. So it's the price actions they are seeing. All these things here, we did it in case for any reason price begins to come towards that direction. You can see that price got to one of our price actions and then gave us this long bearish candle. And that really helped me. That's the reason why I was waiting for that entry that I told some of you yesterday in the mentorship group, that I told you that I was supposed to take that entry. No, I took the entry actually, but I said I was supposed to post, but I did not post because I was driving, you know. So that was how we didn't take that in. I didn't post that entry, but I took it. I took the entry because I just knew that 4 hour time frame price actions are usually very strong and price actions for us that are day traders. So the moment I saw that this bullish candle was getting to the price action, I was just waiting for the rejection. The moment I saw the rejection, I knew we're going to go long bearish. And that's how I got that. So then let's go straight. 3 hours is not very different from 4 hours. 2 hours is not very different too. 1 hour, two is not very different. So that, sorry, no, 2 and 3 is not very different. So we just go straight to 1 hour and see 1 hour is still not very different, but we consider it. So what do we do from 1 hour? Just like the um, downtrend which we noticed on 24 hours, even on 4 hour, you could see clearly that this is still a downtrend. Even though the counter trend, you can see how it's building. So I have to draw a line pointing the counter trend. So you can notice that the moment the counter trend hit the downtrend line, it just gave a huge rejection and a bearish move. That's tell you that, okay, that counter trend has been broken. So for next week, we're going to put another counter trend line to see if it will be obeyed by the market or if it will be broken again. So these are some of the factors that helps you guide you to making entries. We'll come to 1 hour time frame and we're doing exactly the same thing. We're looking at the downtrend and we're saying, oh, this is still a downtrend. We're marking out the counter trend as well. And then we're looking at price actions as well, because there are some price actions you might not see in the 4 hour time frame, which you might see here. Now, for some of you who have been following my analysis and my posts, you will notice that I don't have much price action lines again here, because I've gotten to a point where my eyes now see the price action lines even without drawing them. So if you're still a newbie or you're still maybe probably working on your skill, you might still continue drawing the lines. I stopped drawing the line because my eyes now see this price action line even without drawing them. So I just want to see my psychological level and maybe a few price action line, and I want to see more of order blocks and BOS, that's break of structure, because that helps me to be able to understand liquidity. Okay, so that's what I do for 1 hour, and I move straight to we're not gonna do 45 because it's not very different for 1 hour. We're not gonna do 30. We're not gonna do 5. We're not gonna do 3. We're not gonna do 1 minute. But if you do it and it works for you, fine. But I'm telling you what I'm going to do that works for me. So for 15 minutes, 15 minutes is our entry point. We also look at the trend, and as you can see, it's a downtrend, and there's a build of a counter trend, serious one, because of that reversal that happened during the week, which I'm going to be talking a few things about it. And then it broke this counter trend line, and then it was about to break this serious one that came from a high. This is the trend line that came from 24 from 1 week time frame. So that's to tell you, imagine a trend line coming from a higher time frame. It's usually a very important trend line. It's usually stronger for a resistance than anyone that's on a lower time frame. So that's why, if you notice, it was when price got to it that there was now a massive sell. So all of those factors will just let you know that there was supposed to be serious sell from this point. That's the sellers were going to push the market from that direction. Okay, so also on this 15 minutes time frame, what we also do is, after looking at the trend line, we now come to the current price. That's as the week was starting. Remember, we said there are two candles that starts the week. We come to the current price as the week was starting. And then at that current price, we ascertain what the psychological level that is closest to it is, and then we take from there to mark all the psychological levels. What are psychological levels? Psychological levels are round figures, round numbers, which we believe, or not that we believe, which we know that the banks and the institutions usually prefer to use as their entry into the market. Look at this one, for instance. Look at the number. This number is a round figure number. If you look, you see it is 1.22500. So it tells you that banks don't like to come in at 1.2251. So because of that, since they would like to come in at 1.2250, then that level is very important to us because it will drive the market. So what we want to do is we want to market 50 pips as apart from each other. That's how we have all these levels. So in the next 10 minutes before I close now, I'm going to now look at how I made my entries. Yeah, I made few entries because there were days when I was driving. I drove from some states to some states, and it was a long trip, and I didn't have time to be on my system, to look at some entries. I was actually looking sometimes when I stopped at some traffic point, but I couldn't make these decisions and entries. So there are many entries I did not make, but let me just show you the few ones I made. Okay, for Monday, I was not very busy, so I made these entries. Now, these are the factors. That's why I'm drawing them close. Okay, this is our sell region, right? And these are by region. And we have trend, pattern, price, action, psychological level, news, and regions. I told you we don't trade news. So once I see that there's news for that particular entry, I'm going to hold on until after the news before I go in. I can do news when I'm gambling, and sometimes it works for me. Like there was one I did last 2 weeks, and I made $2,000 on that particular news. So that's why I said it's gambling. I could have also lost that $2,000. So don't think, oh, because of that, I'm going to be doing news. If news fails you, please remember what I just said. So now, how did I make this first entry? I told you what psychological levels are. I was just looking at this candle and I'm observing that this was an M pattern coming from these points. Okay, so trend is that it's a downtrend. Pattern is that it's an M pattern. And what happens after an M pattern? Bearish move. What happens after a W pattern? Bullish move. Then I'm also looking at the psychological level. So there's a psychological level here. And the moment I saw that the bullish candle came to psychological level and was rejected and began to give me a bearish candle, all I needed to wait for is to confirm that this is a true bearish candle first before I made my entry. So how did I confirm? I waited for it to form finish. So the moment it formed finished, you could see that the low is still above the bullish candle that is close to it. So, but when I saw that the next one coming with it, it's a huge rejection. I knew that that was going to be an entry. Now that might be difficult to say, oh, I want to make my entry from a psychological level. So for that case, I do market execution. And when I took that market execution, I knew that there's another block here, which if it's broken, it will become a BOS for me. So I also pay attention to see what was going to happen. And it broke. And after it broke, it became a break of structure, which brought about this little reversal. And then price just went straight to hit the downward red line for the sell region of the week. So the moment price hit that line, I was looking at take profits, which I took my profits. Then I was waiting again to make another entry. If I see a bearish candle breaks that red line, because that red line is very significant for us. It's a strong price action level. And it broke. And the moment it broke, all I needed to see is another rejection for a bearish move. And immediately I took the second entry. My take profit was on the next. My final take profit was on the last price action level, which I suspect might be a reversal. So that's how I made that decision for those entries there. Same way was how I made the decision for this particular one, this particular entry. You could see that I had taken out all my price action lines. I have them in my eyes. So all I needed to do is I just noticed that something is going on here, and there's a little bit of liquidity here. So all I need to do is to use my order block, order blocks. That's a smart money contract system for price action to make a decision here. Now, there's something I wanted to add to today's knowledge, which I did a course during the week, and I had to do a little bit more. I just had to get more knowledge on SMC because we're not fully trading SMC. SMC is smart money contract. We've not been fully trading it. We've been trading our own strategy, which is not necessarily SMC. We just pay more attention to psychological levels, price action lines, and make our entries. But you see, other blocks, which I discover, helps you to be able to get long entries. And that long entries can make you win an account, maybe if you're trading the proper account, at a glance or at a move. So that's why you need that SMC. It will make you higher profitable. So I went to do a course, and in doing the course, I discovered that there are some valid OBs and there are some invalid OBs. Not invalid OBs that are BOS. Broken OBs are BOS, which is break of structure. So I now began to look that, okay, there are some valid OBs and there's some invalid. Now, in this case, these blocks that I drew here I'm not really paying attention at the SMC laws. What I was paying attention more is the rejection. I just paid attention more to the rejection. So looking at the rejection, I'm just waiting to see if price will get to this rejection and the candle that it gives me for me to make an entry for either a bullish or a bearish move. So when the rejection came and it was bearish, I knew I was going to go bullish, and that's how I took this entry, and my take profit was here. That's final take profits. Forget about the TP1, TP2, because I've taken out the lines. If the lines were there, I would have been able to point them out for you. So that's what I wanted to show you there. But if I want to tell you the validity of a valid order block or an invalid order block, I'll begin to explain things to you like, let's look at this point now. If you're looking for another block here, first of all, you have to look at the block that gave the bearish move. So this is the bullish block that gave the rejection that led to this one and then gave this rejection. So normally from the course I did, it is said that if this bearish candle happens to close above the bullish one, as you can see here, then it begins to make this block an invalid order block. You see, and then if you take if it did not close, let's say it's valid. Let me look for a valid one. This one is a valid one. This green one here is a valid one. So if it's valid like this green one, okay, no, that's not valid. Sorry. Let me look for one valid. Look at this is a valid one. If it's valid like this, and for any reasons you have, I need a horizontal line. For any reasons, there's something called I'm trying to remember the name they used, but to me, I call it a block that was not broken, or a resistance that became support that was not broken. If I just drew a green line, if you can see it, you notice that this bearish candle, after this long bearish candle, did not break that line. How did I get the line? That's the low for the other block candle, right? That's where the rejection started. If you are taking that candle as the order block and the next bearish move did not break it when price did a retest, or rather touched it and then begins to go bearish, it makes it a valid order block entry. Do you get? So I just wanted to point that to you so that you can be able to know a valid and an invalid order block. That will help you to be able to make certain decisions for long entries that will give you good move. So in 1 minute, before I close, okay, I needed to say something about this. So if you look, you notice that I said something in the mentorship group that there was massive sell, of course, for several days. And then here, we begin to notice that the W pattern was briefly forming. So for everybody who wants to be careful, you have to observe the market. You'll notice that this was a W pattern. And what comes after the W pattern? Bullish. Then we thought, okay, maybe an M pattern will come here. But looking at it, you notice that it was starting to be like an M pattern, and then suddenly say going to become a W pattern, and then gave another bullish move, and then brought us here. So then in closing, before my time goes off, you will notice that I spotted a valid order block here. I just came, looked, I pictured this particular bearish candle. Then I picked the high and the low. Then I began to look to see if the candles forming here will break that particular block. So I noticed that it entered. So in my mind, I was like, look at this huge rejection here. I was waiting for the bullish huge rejection to break it, but it did not break it. It just touched it and then began to go down. The moment I saw this bearish move break this red line, broke this blue line, I knew we're going to have a massive, because this is showing huge liquidity for sell. I knew we're going to have a massive sell, and that's what led to this entry. And I was able to catch that a little bit. Okay, so that's the review for analysis of this week. So if you can see that most of our entries gave us beautiful profit this week, and you're willing to be part of the profit for next week,